folks, I'm L.A. Little and this is your daily TA wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what might it tell us about the coming days. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, it was another up and away type market. They were pushing higher pretty strong all morning. I mean, we're not talking big points, but the S&P was over that 1950 level, pressing on. The big mover today was the Russell. If we look at the ending numbers here, we had the Dow Jones up 18, almost 19 points, 16,943. The S&Ps ended up tacking on only a little less than 2 points on. They were as high as 1955, closed at 1951 and a quarter. Composite 14, almost 15 higher, 43.36. NDX just a point, 37.95. Finally, wear and tear is starting to hit here. The big mover today, the Russell, up almost 1%, 10.67. Got as high as 11.79, closes 11.75. We actually saw the markets move up, sell off, and then bounce back towards the end of the day to close out. Not that far off the highs in most cases, but in some cases actually at or near the lows because they gapped up. Elsewhere, what did we have? We had oil up big, $1.75, 104.40. This thing's breaking out again. Dollar was up again. Currencies were down. Bonds were down. Not that much, but some. The big mover today, of course, here in the Russell. So that was the way it shaped up today. If we pop over and take a look at these markets to see what they look like. So bear with me a second. I'm running a little bit behind getting started here today. But if we take a look at these guys, let's start with the strongest one, which is the S&P. You know, the S&P has made this move off the bottom. If you go back and look, you know, Draghi said what he was going to say, basically made his promise here on the 8th. That was when Draghi came out and says, you know, we're not going to move today. That was on the 8th. We're not going to move today, but we are going to move in June. That was this day, right? That was the lows for the market. We didn't see lower lows on the S&Ps, and in fact, after the Bundesbank, which was about a week later, after they came out and said, hey, I think that makes sense, we should move in June, then this market started to crawl, and the crawl has been going on ever since, right? It's 3 weeks straight now, straight up. You don't even have a beat point on the S&P 500. Volume, yeah, nothing to write home about, but you know, folks, it doesn't matter as long as the market goes up. You tried to do an over-under today, but couldn't quite pull it off. It would be a 2-bar reversal. You could argue it was a 2-bar reversal. There was a little consolidation here, so I probably wouldn't go that far. I would say an over-under, though, and probably some softness, but it never gave it up. And by not giving it up, that means it can simply try to carry on. So that's what the S&Ps tell us. The Dow tells us the same thing. You got the same sort of setup here. Here you actually have an ABCD structure in place. And on the Dow, that projection is, let me see what the numbers look like on it. 17,097. We're not that far away. You know, another, what is that, 100 points. So Dow is fairly close to finishing off a bullish daily ABCD structure. Then we go over to the guy that was leading the day, which was the Russell. And on the Russell, we actually had an ABCD structure in place. And I might as well draw some of these in as we go. I count the easiest one to make, right, which is kind of the worst case. That number was actually about 1172. Russell powers up there in 4 days, right, and just captures that 1172, runs into the wall of resistance up above it, closes right at it. Russell just finished off its ABCD structure. Typically that means you're going to get some sort of consolidation now, right, and potentially set up another one. And so if you got a small consolidation, you could set up another large one. The deeper the consolidation, right, the less the move. I would expect that this thing is going to come back. Probably the top of this bar is where you have to look. You can see the zones that TA charts have drawn for you. That's probably going to be the area that at best it's going to try to come back into. So that's the Russell. Russell does what it's supposed to, finishes it off. And then if we go over and look at the NDX, which has, the NDX was the powerhouse in the higher beta stocks, right? And even though here we're talking about the top 100, so the betas weren't that big, the NDX was the driving force outside of the Dow and the S&Ps in terms of something that got sold off but actually started to break higher much before the others did. It runs up there, does a doji on Friday, does another doji today. This one looks spent. And spent in the sense that it wants to try to drift back in a little bit, but it didn't really give you any kind of signal that that's what it was going to do. 37.95.14, it closes just over it, volume a little bit heavier, so this thing can try again tomorrow to press even higher. And so much of this is the continuation off this dramatic run in Apple. And we got actually we're not going to get the quotes here today because they did the split and these charts aren't up to date. They'll go up to date tonight. But anyway, the split takes place in Apple. That thing was at 644, and if you do a 7-to-1 on today, it's up another 1.5% today. So Apple's been the big winner on the way up and keeps pressing higher. But you do have a failure on the IXIC. It fails at the top of the last breakdown bar. So Russell finishes off an ABCD structure. NDX looks pretty spent. The two strong indexes still look like bulls and they don't want to give it up, anything up. NASDAQ actually gets to the top of that bar. Big volume over there, 32.4. Gets over it, back under it, only doing 17. So you're doing about half the volume as you come into it after a pretty good move. Now, the NASDAQ itself still could move higher on the ABCD structure. Let me see, we got as high as 43.46 today. And that number it was trying to get to is about 2% higher. So if we draw in that ABCD structure, so you got a bullish ABCD from here back down and back up, and you can see it still has a ways to go. So maybe a pause here as a result of the resistance, some sort of consolidation, maybe a backfill into the support zone, and then maybe another nested ABCD structure that gets you up there, right? That would probably be the strongest case to get there. So you pull back a little bit, you set up another one, and then you push on up and you capture it. Remember, this is June. It's performance anxiety right now. You got about 2.5 weeks to go before the end of the quarter, and I can guarantee you that 90% of the money managers are underperforming the S&P 500 because they're not all invested 100% in that index or in the stocks in that index, and most or a lot of the stocks got hurt pretty bad over the last 2-3 months. And so performance anxiety says, oh man, I've got to try to catch up. How do you do that? Well, you go over to these guys, right? You go to the Russell. Why did the Russell push so strong today? Is there all of a sudden some sort of a change in the valuations? No, the change is money rotation. It's chasing performance. And that's, period. That's what you see out here. And you see it actually not just here, but you see it elsewhere. If I go over and look at the biotechs, for example, these things bottomed out, right? Draghi's day was right there. They made their move. Now they're doing their push. And let me see, that top was 263, and you're at 248. You made a low at 217, so you've gained about 60% of it back already. That's performance anxiety. That's where people start pressing and pressing. and trying to make up their money, and that's what these last 4 or 5 days have been. You know, pure and simple. Once Draghi said what he said and did what he did, now you're pressing. And, you know, the market will slap the hands a little bit here pretty soon, but it's not going to stop it, right? It's going to carry on through the rest of the month probably. Okay, that's the indexes. Let's look at the sectors. So we got a couple of indexes telling us that you know, one finished off an ABCD structure, the other actually failed, and then the other three can actually try to press on. So you kind of got a mixed signal now on the indexes. If we look at these sectors, and we'll just go through the major ones first. IYT presses up, does a doji at the top, leaves some volume. That thing can test higher again tomorrow. The semiconductors, if I look at it on a more narrow SMH, or if I look at the SOX itself, they both closed at the highs, I mean over the highs, but on the lows of today's bars. That usually is some sort of a sign that you're going to try to get some sort of softness, some sort of a pullback. The XLB, this finished off an ABCD structure today. So here's another ABCD structure just like the Russell. It finishes it off today. You get some volume at the highs. That says it can try to test it again tomorrow, but a lot of times volume at your highs can demarcate a top. So we'll see if that happens here. That's the XLB. XLE, the energy sector. Just like the IYT does a doji at the top. That, you know, that doesn't mean it's going to stop, but that definitely could be a little reversal sign, or it simply could be nothing more than a pause and then you carry on. Dojis don't tell you reversals until the next day, and that's when you find out. XLF, this one's just powering on. This is the reason this S&P 500 was able to continue on today. This one, just like the S&P 500, it hasn't even put in a B point. I mean, we've ran now from 21.56 straight up to 22.90. That's a $1.40 on 21.56. That seems like about 5 to 6% if I'm doing my math right. That's pushing it, right? But it's still pushing. Hasn't stopped. XLI looks the same. Pushing, pushing, hasn't stopped. XLK. Now this one's pressing on, and it's got a bullish ABCD structure up quite a bit higher, so nothing there. XLP. This one actually did an over-under. It's not a 2-bar reversal, but it's an over-under. Says potentially some softness tomorrow. The XLU, and notice these are the safety guys. XLU gets to the top of the range, fails, starting to come back in. XLV also trying to test the tops, get over them, can't quite do it. That one also, quote unquote, safety sector pulling in. So we kind of got safety pulling in, other than the XLB finishing off an ABCD structure and a couple doji highs. And the XLY is the only other one, that's a doji high as well. So you got 3 doji highs that could be reversals. So what do you have here? You have very faint signals that we're nearing some sort of a possible small pullback. If I look in the OX markets, TLT didn't go anywhere. That one actually looks like it wants to try to trade in some more. It is up against some decent bars here. So, you know, whether it comes down more or not, we'll have to see, but it certainly couldn't get any juice to the upside, and it kind of looks to me like it's going to try to trade down deeper, which would actually be bullish for equities, and it looks to me like it's going to try to trade down into this area. But we'll see where it wants to go. It's just setting up that way, and if so, that also tends to suggest that the equity markets aren't going to sell off big at all. Gold, silver, they can't go anywhere. If I look overseas, and let's go to Europe first, you got the CACs sitting at highs. You got the DAX sitting at all-time highs. All right, these guys haven't pulled back at all. You got the FTSE trying to make highs, right, pressing up against them. If we go over and look at Asia, and we start with the Chinese market, The Shanghai H shares pressing up towards that high, still pressing. And then let's see what the FXI looks like. Not FXI. What is it? The HSI, which is the Hong Kong index. And what do they got? So they pressed to the highs, failed, came back. They're going to try again. It's still going to try again. So, you know, everywhere you look, you know, yeah, we can get a pullback. Yeah, there's some subtle signals here that maybe we're going to get that pullback. And you know, and this week actually makes sense. You've had a non-stop push basically for 3 weeks. Much farther, I suspect, than most people thought. I think most people thought you'd get to sell the news. We talked about it Wednesday in front of Draghi that it looked like it was set up to buy the news. We got to buy the news. We got more buy the news on Friday off the employment numbers, and we got more push today. That's kind of stretching it to the point where those that had to give up are giving up. Or if they haven't given up, they're pretty close to giving up. So, you know, you're getting to that point now where it looks to me like you can get some sort of a retrace. Market loves to just make it so that nobody's there when it actually retraces, right? And they've given up hope, so to speak. And that's kind of the way these charts are starting to set up. This week, quiet week, no news, right? Kind of a vacuum. It's the perfect time to get a small pullback. It looks like it's about ready to happen. All right, let me see what kind of questions you folks might have, if any. And let me tackle those. And if you want to send me a text or send me an email, you can do it at 303-912-9110. That's where you send the text. Send your emails to support@tatoday.com. So let me see what I might have. I don't see anything in the room here. You can add to okay, so Chipotle is a question. Let me see what this one looks like. CMG. So Chipotle has been on a run. So this was another one of those high betas, right, that really got hammered off of earnings. And, you know, so many times I see this, right, where these things, they climb all the way back up to where they broke down from, and then they come down again. And that kind of looks the way this is setting up. Let's see what the weekly looks like. So the question is this a buy? And I think it'd be hard to buy it right here. So 568.90. That top, the breakdown bar is 588.69. We're at 5. We're basically at this high. So if I'm wanting to buy it, no, I don't want to buy it here. I'm going to make it retrace. I'm not going to put my money out at this level. So where can the retrace take you? Boy, it's hard to tell. I mean, you see what the 3 weeks does? You know, where's your support? You know, if I'm a buyer of this, where do I put my stop? Right? That's the problem with buying now in a lot of cases, especially those that have just been stretching on absolutely nothing. There's nothing underneath them. And so it's almost impossible to put a stop here. So I look at this, I can't tell you where to buy it because, you know, when I look at it, I don't see a buy. I don't see a risk reward that makes sense. I don't see a probability of success that makes sense. I see it potentially getting as high as here, but where do you put your stop? I don't see it. I don't know where you put it. And so from that perspective, I don't know how you trade a stock like that other than just simply wait, watch, and, you know, be patient and let it come back in. Let's look at some stocks that I was checking out. Let's look at some of the large cap stocks here. And I want to go to the big ones in the NDX. We already know Apple's been driving this thing. Apple up 17-18% already in the last 3-4 weeks. That's been a huge part of the NDX drive. So Microsoft's testing at the highs and does look like it's going to fail at the highs. So I don't see Microsoft propelling us farther. Let's look at Goog and Google. So here's Goog. I know Fidi's probably watching. Federico, 566.57 is where you want to sell. You're getting pretty close, and so far there's nothing coming in. Let's look at the stronger of the two, Google. GOGGL. And that one looks the same. So that doesn't look like it's going to drive this market. How about Oracle? So we're just going to go down the list of the heaviest weighting ones. Oracle broke out on Friday, got a little bit of an extension today. It was suspect, so I suspect it will come back in. So I wouldn't be chasing it. But that one can extend a little bit farther. It's looking a little worn at the tops here. Intel's the next largest weighting. And the first 7 of these is, that one actually went over, under, but it's not a 2-bar, you got a higher volume. So Intel can actually pop back up there again tomorrow. Intel is a reflection of what we saw in the SMH earlier. Amazon's the next highest weighting. Let's see what that one looks like. And that looks like a failure setting up at resistance. How about the last one here, Qualcomm? Qualcomm's been a steady performer and just sitting at the highs and I mean at the resistance area highs. So this one already did what we were just looking at on CMG, right? Breakdown, climb right back up to where you broke down from, and then you see what happens. It just goes sideways, and that's what's happening here. So I don't see it coming out of there. Let me look at, I'm curious as to what, I have a little bit of time. I want to go over to look at the minor sectors. I always look at the majors, but I don't look at the subsectors that much. So let's pop into some of these real quick and see what they look like. So how about biotech? So let's start with the BBH as an example. This one's back up to its breakdown bar. The bottom tops. That looks like it's going to fail right there. The miners, I don't think the miners can do anything, but let's check them and see. And they look as pitiful as gold, so they don't look to be going anywhere. Here's the broker dealers. So we know that we're getting big moves in finance, right? In terms of the banks, broker dealers really can't get going. So broker dealers aren't doing it. How about Textsoftware? Let's see what this one looks like. Now this one's pretty thinly traded, so it's hard to read. We can only really read the price. I don't know. That's breaking over a swing point high today, though, 82.89, and that one actually can climb some more. So the software looks okay. Real estate, IYR. So these are the real estate. A lot of these are REITs and so forth. And wow, and they had a nice push up on volume. They had a 2-bar, not a 2-bar, but an over/under, and there's that softness. This looks like it's going to retrace some. How about insurance? The KIE. Let's see what the insurance sector looks like. Now that one has been pressing higher, and as bonds come off, it presses even higher. So little reversal at the highs today, 64.88. Got over it, back under it. A little bit more volume though, so that doesn't necessarily mean that one's done. How about the regional banking now? Regional banking was struggling, and I suspect they have been pushing, and they have. So they push up into resistance today, and that actually looks like it can go higher. There's an ABCD structure though that's finished, it looks like, and that's right here. So you got an A point, your B is there. Yeah, that looks about done. So looks like the regional banking has probably run its way out of room here. How about agribusiness? Moo. Let's see what this one looks like. Yeah, the highs, so they're still doing fine. Oil services, and these guys have been on fire. These are the drillers, and look here, another ABCD structure that's finished. So we've had extensions. You can see them all over the place, right? There's another one. That one's finished. Got volume at the top. I would think you get some sort of test and some sort of a pullback. Aerospace. Let's see if we can read anything in this one. It's kind of thinly traded too. And yeah, that's a nice big spike. So aerospace looks fine. Food and beverage. Let's see what we got here. Again, these are so hard to read when you don't have any volumes. Yeah, I can't read anything in it. I mean, price-wise it failed, but I don't know what that means really, because I can't read volumes at all on these. Steel sector, this one has enough volume to read, I think. And, you know, I mean, it's not the big spiky thing. This one's going to test the highs. So steel's doing all right. Social media. So like Google, I mean, not Google, well, Google to some extent, but Twitter and Facebook. These guys got creamed down about 30% off the highs. They're having a hard time moving up, but they're trying to set up an ABCD structure here. You've actually had one already, right? So there's one from here back down and up, and that one finished. And now there's another one taking place, right, that actually take it back up to the highs. Let's see what the top two in this group look like real quick. Facebook. Facebook was trying to break over a bunch of highs. It's still hanging there, can't get over them. How about Twitter? Twitter had gotten creamed and then got a bounce. Still can't get anywhere. So that sector still looks pretty tough. Solar, tan. Solar has been going nowhere and still going nowhere. So this one also sold off something like 25%, and it can't hardly lift. It could set up an ABCD if the rotation comes back into it, but right now it's struggling bad. So when I look across subsectors, not too bad. I mean, they look all right too, mixed signals. Looks to me like some softness coming. I don't think it's anything big yet, but you know, the press has been on. Big moves already happened. The easy money, if you want to say it that way, has already been made. Now it's hard money to make if you're trying to press to the upside. You're just going to have to count on it not retracing much if you want to press your positions at this point. All right, looks like I'm out of time here. I'm going to leave it at that. Thanks for joining me. Have a great night. And until next time, I'm LA. This is, and it was, your daily TA Wrap. Have a great night. I'll see you next time. Good night, folks.